felt it would give us the best access to the strongest possible group of senior insurance decision makers.
Insurtech Insights is a must-do conference, I think, for the network that is built here.
Good morning, everyone. It's great to see quite a few people here interested in car insurance. I'm Sten, I'm CEO of Zego. When a few of you saw this title, you told me, Sten, I'm nervous, but I'm also intrigued. And I said, well, these are the good two emotions to have, because when change is happening, change is coming, it always makes us nervous, but also change isn't always bad. In most cases, it's actually pretty good. And I'm going to talk about it today. Before that, I'm going to take 3 minutes and explain you what Zego does, because I think a lot of you have heard the name, less the substance behind it. We ready to roll? Let's go. So Zego is all about the behavior-based motor insurer, serving customers and also self-employed, those two segments. We started out self-employed, and we are rapidly growing into consumer segments as well. We are full stack, fully vertically integrated. We do the sales and distribution, either directly on aggregators or through partners. We have policy administration and servicing, we do that. We got our own policy admin system and all the bells and whistles around it. Pricing, underwriting, it's all in-house. Claims management, we got claims management in-house. And also we have our own insurance carrier that we underwrite from. Ultimately, what are we here to do? We want to be able to provide the lowest price of insurance for good drivers. And it's important to note the lowest price for good drivers. Bad drivers, we want to increase the rates. We only want to insure good drivers. And in this room, there's probably 500 people. One of you is a dangerous driver who arguably should never be driving. That is 50 of you in this room are dangerous drivers. Our objective is not to insure those 50 and insure the rest. And how we do this is mobile phone telematics technology. Traditional insurer offers you a policy. You'll take on month 12 whether you renew or not that customer. Whereas with us, we know by week 3 are they good or bad customer driver, and then we proactively manage that risk on. We have a list of thousands of drivers already who are super dangerous drivers, who we kindly parted ways, who are insured by maybe several of you in this room at the moment. And that list is only growing every day. Last year's combined ratio was 90%. We had 160 million gross written premium run rate. And we've been working hard on profitability as well. We achieved profitability end of last year, and this year tracking full year profitability. Okay. So, why the biggest disruption is yet to come? We need to go several hundreds of years back. We need to go and see what happened from the transition from horses to cars. That was around, hundreds of years ago when we used horses. Ultimately, we used horses to go from A to B, right? Either carrying people or carrying goods and so forth. Then, in early 1900s, we had first automobiles come about, right? How you're going to go, same objective, moving from A to B, either carrying people or goods, but those are the first kind of rare sightings of those types of vehicles. And then we got into 1920s. In early 1920s, that's when we started to do mass production of automobiles. As you can see, there's a real mix back then. That's, by the way, in London back then, mix of horses, a mix of automobiles. And by the time we got to 1940s, the horse-drawn transportation just became very rare. You can see here on this picture, there's literally one out of probably 30 vehicles that we are seeing on this picture. So what it means is that, overall, when you go back to when there was 100% horses moving us and our goods from A to B, it took 30 to 40 years for a full transition, going from horses to cars. And how many horses we see today? Well, this complete rarity, right? It's a novelty to be on a horse. Now, again, if you double down and look at the 50s and 60s and 70s, same premise. Like the vehicle in the 50s, well, it's a kind of an antique vehicle today, but again, it took people and goods from A to B, and all it really happened was that we had more selection in colors, and we had also different types of engine sizes. But at the end of the day, the vehicle in 1920s we saw, like, again, 4 wheels and an engine and a steering wheel, the same. When you look at 2025, where, like, how all of your vehicles look today, exactly the same functionality. Just, again, more colors, a few more different fuel types. But at the end of the day, there is a person sitting behind the wheel and operating this vehicle. That was exactly the same like it was in 1900s. So in that sense, although we think that there's been a massive evolution in terms of like vehicle, yes, the vehicle itself has evolved. The way the vehicle is operated has not really changed over 100 plus years. What has happened though, we've got a lot more distracted behind the wheel. Today, 60% of accidents are happening because of mobile phone distraction. 15 years ago, about that, we did not have mobile phones, right? So risk has changed, but at the end of the day, still a steering wheel where the person is behind that and moving from A to B. Now, that is well and good. However, things are changing, and they will change. I think we are entering a place called messy middle, and that's, let me explain you what I mean by this messy middle. So at the moment, and again 100 years ago, and today, human-driven cars are 100% that's on the roads. So it's pretty clean in a sense. We know and we understand the types of vehicles, how it's driven, decades and decades of kind of experience. But we are entering a phase where we are transitioning from 100% human-driven vehicles to autonomous vehicles. I think those two worlds of like 100% like human-driven vehicles and 100% vehicles out on the road being autonomous, these are actually pretty simple worlds to operate in. What is going to be the challenge and the biggest part is the messy middle, which is when you're transitioning from 10 human-driven vehicles to 8 to 6 to 4 to 2 to 0. And by the way, that transition will be initially slower, like you saw with how we introduced automobiles, and the second part will be massively accelerated. And hopefully that kind of illustrates as well. So us as insurers, us as people evaluating risk, it's less about talking whether autonomous vehicles is good or bad and how they can operate. That is very simple world, arguably. It's the messy middle. If you have 100 vehicles on a road and one of them is now autonomous, and then suddenly 2 and 5, and you insure them, and these are the things to immediately start solving. And I think that's why I call it messy middle. When you look at what's happened more recently, you can see that this one kind of first automobile, it's the same stuff that we started with self-driving assistance. That was a very, very niche thing, still is, but over the last 2 years, it's rapidly evolved as well. And we know Tesla really well, how there is a self-driving assistance as a first thing. Second one, you see what Waymo is doing in the US, like robotaxis effectively. Now, Waymo does more ride-share journeys in San Francisco than Lyft does. They've rapidly kind of gained market share there. Same, we have Wave, which is a UK company that develops the software to manage all those autonomous vehicles. And so we are starting very in a granular level, the building, the software and hardware to get ready for widespread rollout. Now, so the autonomous world will come. I can bet money on this with all of you. The question is just when, right? As we saw from horses to cars, it's from cars to autonomy. It will happen. Now, what will that world will look like? Just to kind of spark your imagination here. First, we're going to have around those robo parcel machines that effectively come to your office by lunchtime. When you go get your lunch, there you can get your parcels. And these same vehicles will roam around your home streets in the evenings and weekends. They notify you can get your parcels from there. We will then also have a world where we have multiple charging systems. You just hover over a place. Now, as you saw the news of BYD yesterday, 5-minute charging, full charge, has just been kind of announced. You're going to be hovering over 5 minutes, your vehicle is sorted. You're going to have solar everywhere, etc. So the charging systems will rapidly start evolving in that world. You'll also have different types of vehicles. Today we are used to a vehicle that can go from A to B with 5 people. Well, we're going to have one-person vehicles. Perfect pod, you go in, you put in your coordinates where you want to go, and then just drives you from A to B. Those vehicles can be literally back-to-back behind each other because they're not going to crash into each other, so very efficiently moving. Or 2-person vehicles, the same story. So the type of vehicle will change rather than just the classic vehicle that we've known, because most of the time it's 1 or 2 people in that particular vehicle. And we're going to have today we get food served or breakfast out there. Imagine there's 30 little kind of a container style pods that arrive. You go and get your bits, they disappear, and then they come back for lunch, and then they go again, right? So we are going to be, and then while you have your lunch in a sunny London like today, you also go to London Museum of Fossil Fuels and look at the car that you're driving today. That wasn't that a unique thing back then. So it will happen, right? A fully autonomous world will happen. And fully autonomous world is actually very simple world in such, because there's no human, no unpredictability as such. There's certain risks which we'll come to, but there is significantly safer where we are today and significantly more predictable than where we are today. So how long will it take? So first of all, how many vehicles there are in the world? 1.5 billion vehicles, cars are in this world. So every fifth person, roughly speaking, has a vehicle. And in the UK, for example, there are 42 million vehicles. We sell every year 2 million new vehicles. So if we were to, tomorrow, roll out 100% of autonomous vehicles, it will take about 20 years. So my guesstimate is, before actually I sent the slide over last week, my guesstimate was 15 years, best case. I would actually correct that now to 12 years, considering some of the news or transformations I've seen the last couple of days being announced. And the worst case is probably 40 years. Certain things will just take longer. And, for example, energy, major problem. We talk about autonomous vehicle being electric vehicle, right? But in order to do all this 42 million vehicles electric, our grid in the UK can't handle this. They can't handle even 20% more. But that would be huge, massive energy. Production needs to change, and also consumption and the delivery of energy needs to change, which today's systems aren't there. So I think we're going to be seeing a lot of non-electric autonomous vehicles earlier. Petrol autonomous vehicles, probably earlier than just electric ones. So my guesstimate is 12 to 15 years where 100% is all autonomous, to worst case 40 years. When you compare that, what I shared with you earlier, well, horses to automobiles, it took 30 to 40 years. But we are a lot more, when you look at everything around, how rapidly with the last, with internet, with technology, how we moved, and I think that will be faster. But still, as I said, physically replacing, you've all invested in those cars, they have to be rolled off, all of those things. So probably, 12 to 40 years. Once we are in this lovely new world, then that's a kind of a blissful world. But the messy middle is what we have to truly think about how to solve for. And that's when the winners and losers in auto insurance, I think, are defined. So what does that then mean from insurance risk point of view. When we think of cars and when we think of people who drive around today, we really try and get an understanding of driving behavior, how someone turns the wheel and changes the gears and everything else. That was 100 years ago, that was 50 years ago, that was 20 years ago. That's today ultimately what we're trying to understand. And we've developed ideally what we want to find out, fatigue, distraction, speeding, all of those things. But we've not been able to access that data. Therefore, we've come up with proxies like your age, like your occupation, like your engine size of a vehicle, because retrospectively, hey, if you are a real estate agent, you are more risky, more kind of worse driver than maybe a lawyer. Those have been the kind of factors we've been trying to predict driver behavior, which arguably just doesn't actually hold true at all. I can bet money on it. There's a 21-year-old in London who's significantly better driver than a 50-year-old in Yorkshire, for example, right? But the price difference is completely different. Liability-wise, we are insuring property, we're insuring, bodily injury. That's what we're trying to understand. That's where we do the payouts. In an autonomous world, well, there's no human turning the wheel anymore. The driver predictiveness, how they behave, disappears. So what we really need to then think about, cyber risk. What if all of those, one day, 1 billion vehicles all get hacked in certain areas? How do we insure for that? Hardware, right? How does the hardware stay together? How does that change? Because there will be multiple types of vehicles out there. 1 person, 2 person, 4 person, etc. Software, right? What if the software just malfunctions? You're on your way home and it's just sometimes your laptop does a black screen and does a restart, right? And if the vehicle is going 30 miles an hour, what happens there? So there's a software risk to then evaluate. And of course, public liability, whereby there's still people in the streets moving around and so forth. So there is in that sense, the risk that we evaluate in that world really truly changes. And I think it's becoming, the closest I could describe today is business property insurance. Because you've got people going in and out, and it's a physical kind of there's how well the building is built, how it's being used, all of those things. That's probably the closest kind of today. But so they become moving properties as such, which have a lot of technology in them and lots of cyber hardware software risks related to it. And that is the one that by the time we get to that place, it's going to be super clear, and we insure them with a fraction of price we charge customers today. What else will happen in that world? Again, in this messy middle, what do we have to really take into account? Claims. Claims get so much more complex. So today, we have well-established supplier networks. We've got car manufacturers. We negotiate volume deals, etc., etc. Then, today, you've got 10 human-driven vehicles. Then you introduce 1 autonomous vehicle. Okay, well, if, let's say there's an accident with autonomous vehicle where a person crashes into an autonomous vehicle, what is your replacement vehicle to that autonomous vehicle owner? Are you going to give them person-driven vehicle, or are you going to give them autonomous vehicle to replace the vehicle? You've got 2 different kind of vehicles that are built in a very different manner. What is then your kind of repair network, your supplier network? How's that going to be? 1 car manufacturer is going to make 2 types of vehicles. So there's a lot of claims complexity to get onto it very quickly. Also, the use of a vehicle becomes very different now. Today, we insure personal use. Okay, you get mostly either commute or for personal use on the weekend. And insurance know that you, on average, use a vehicle 2% of the total days or years, hours in the day. So therefore, you work out the insurance risk based on that. But then you're going to have a vehicle that, I use it for the weekend, and then on evenings or in the evening, I just give it to into the ride-hailing fleet, and then that vehicle itself will be earning me money while it's going out and about. So you've got to have 1 person in a vehicle, then you suddenly got business use for and you can have from all the way from 1 to 4 people in a vehicle. So the different kind of use cases immediately evolve as well. So the line between personal and commercial get very blurred. Also, the autonomy models today, if there is a person who's using Tesla, and I would argue that the percentage of time they are in a drive assistance mode versus not. If they're in drive assistance mode, it's way more safer. So you're going to have that to be taken into account as well. So you've got fully autonomous, then you've got driving assistance and so forth. So you've got different types of risk to take into account there. And the ownership pattern change. Again, insurers have been split mostly. You are a commercial business, so you focus on commercial customers. And then you've got individuals, you focus on individuals. That's how we split our businesses. Well, you're going to have a lot more mini fleets. You're going to have a lot more different types of vehicles that are owned by a person who just has vehicle for themselves, and then 2, 3 are in the ride-hailing fleet, for example, or goods fleet that move from A to B. So the ownership will also change, which changes the mix. So there's a lot to take into account in that world, and I think once we are in autonomous world, that is simple. It's the messy middle that we have to figure out. And insurers generally love a lot of historical data. You are not going to have historical data. You are not. We've been able to have the horses data, the 50s vehicles data, 70s, 80s, noughties. We're not going to have that, right? So what is our plan? And hopefully that inspires you as well, because quite frankly, Zego on its own can't solve the problems. We need all of you to focus and kind of move in the same direction. First of all, we are doubling down all in behavior-based insurance products. We are through and through telematics, all the way from distribution to pricing to claims to capacity and so forth. We are all in. You could argue telematics has been done previously, yes, but that's a separate conversation why I can argue that it's just done incredibly poorly. And if you're all in, if you're through and through in your company, electric vehicle makers, if you're through and through electric vehicle maker like BYD or Tesla versus a German car maker who makes one make a model being electric, is a complete different kind of approach and advantage. And then secondly, the key thing is evaluating the combined data. Take the data from autonomous vehicles, take the data from human-driven vehicles, combine those two together, right, proactively. Because as I said, it's 10 vehicles driven by individual, then 9, then 8, then 7, but autonomous vehicle comes to it. So you have to take those both risks into account. You have to plug into those data sets and start looking at that data. And insurance products will evolve, as I just explained. The ownership will change, the periods, how it's used, for what it's used, all of that is going to change. So we will design appropriate insurance product decisively and quickly. That's the key thing, because you need to get from that limited data set, you have relatively fresh data set, and build those products out. Whilst we also build a highly scalable and lean insurance operation. You talk about a lot AI, this whole conference is a lot about AI. That's to me given. We will build an insurance company where the expense ratio is a third of a traditional insurance company. Right? And that is absolutely possible and doable with the technology implementation. So those are the kind of 3 areas, and that how I think that when we go from the autonomous, from person-driven world, phasing out those vehicles all the way to autonomous world. But my big question then too is what is your plan? Because I think we all need a plan. And as I showed earlier, from horses to cars, 30 to 40 years. Initially, probably everyone looked at, I'm sure you've heard or read and seen the stories how everyone thought about the first automobiles and how it's suddenly, Henry Ford was mass producing them and suddenly they became a norm. And autonomous, we kind of talk, oh yes, autonomy, but we really mention it, but don't take it seriously. But that's because, there's still a few obstacles to overcome, but it will happen. It's already happening based on the signals I just shared. So if you want to be in the business of insurance, if you want to be in the business of vehicle insurance, then you have to develop a plan. Because I think the way the insurance for vehicles was underwritten over the last 100 years will be drastically changing. And it will be more looking like, the other lines of business of property and all other things that we have to underwrite. So that's our thesis. That's my view. I hope it gave you some information, some inspiration, how to think about the future of car insurance. Thank you.